So let's look at safe withdrawal rates. I think this is very important because people think, well, I have my money in the market. It's an S&P 500 index, or I have a 60-40 stock to bond portfolio. I'm okay. My broker says everything's okay. Well, when you look at this, this is a chart from 2000 through 2025, shows the S&P 500 returns, assuming you're invested that way. It assumes you have now $1 million in an IRA, and you want to take out $50,000 per year. It sounds reasonable. You're paying 1% in advisor fees that you knew about, but you're paying 2% in extra fees you didn't know about. Then you get stock market rates of return each year. You start with $1 million in 2000. The market goes down 10.14%. They say, hang in there, ride it out, you'll be okay. You lose 101,000. You take out your income of 50,000, pay the fees you knew about, pay the fees you didn't know about. You end up with 818 at the end of 1 year. And you say, okay, it'll be fine. They say, don't worry, it's not going to go down any further. 2001 goes down 13.04%. They say, hang in there, ride it out. You do. You lose 106 grand. Income and fees, you're down to 637. Start 2002, the third year, with 637, and they say, don't worry, market's at the bottom, it won't go down any further. It goes down 23.37%. They say, hang in there, ride it out. You do. You lose 148, income and fees, you're down to 419. And at this point, they're like, okay, this is the lowest it's going to go. The market always recovers. It's going to recover. Well, the market did recover. Look at these rates of return for 5 years. 2003 to 2007, great rates of return. So in 2003, you're at 467. You got all these rates of return, and by 2007, how are you going to ever get it back if you're only at 339,000? It's because you earn these great rate of return on what? Not your full million, but on significantly less money in your account. That's why these rates of return were meaningless to you. Then in 2008, we get a big stock market loss of 38%. They say, hang in there, ride it out. You do. You lose 130, income fees, you're down to 148. And then they're almost giddy and telling you, don't worry, hang in there. We're going to get huge gains. The market always recovers. They're like happy about it. Because look at what the market did earn. The problem is you're earning those rates of return on what? Having nothing left in your account. So at this point, how would you like to be out of money in 2012 and get no more income from that point on? How would that feel? And you know how that feels. It'd be devastating. You'd have to go try to find another job, go back to work, sell the house, minimize expenses, etc. And you don't want to be in that position.